Hello everybody. So today I want to discuss why Bitcoin is my second largest position. And I'm just going to go ahead and get started. This channel is named Beat the Denominator. The denominator for a reason. The denominator is the US dollar. And you want to outpace the growth of the US dollar. That is how most investment work these days. Bitcoin is the only asset out there where you have a guarantee, and I weigh my words here, that they won't make more of it. Of course, no financial loss, just entertainment. But Bitcoin, the theory behind it is you have everything that we value in society divided by 21 million. That's why Bitcoiners are pretty crazy about the whole one Bitcoin is one Bitcoin. Now, when you have US dollars, when you use US dollars as your unit of account, as your monetary unit, US dollars do not have that hard cap. They do not have the coded cap of 21 million. There's always a reason to issue more US dollar. The last reason was 2023, the banking crisis. Before that, it was 2020. That was another reason to create new US dollars. Because there's always a reason to create more dollars, right? They make more dollars. Whoever's in power is always going to be tempted to make more dollars. There's always a good reason to make more dollars. The reason for that, because of that, we have this thing called inflation, monetary inflation. The best example of monetary inflation that I found and that I usually discuss on the channel is that of Sears homes. So these Sears homes used to cost, so you see this is a family house in 1916, this family house, and it was shipped right on a railroad car, and you had to hire people in the town to help you assemble it. But the whole house, the whole kit house used to cost $938, not $1,000, not $9,000, $938. That was the cost of this full house. Today, a full house like this in a town that has not experienced industrial decline, like if you find a house like this in the South, not in the Midwest where there's been a lot of decline, but if you go in places that are still thriving, a house like this is going to be $400,000 today. That was $938 brand new in 1916. Now, why would the price of a house like this, for example, why would that price go up like crazy? Why would the value of the house go up so much? Well, it's because we're not dealing with that value of the house. The value of the house is the same. One house is one house. One Bitcoin is one Bitcoin. What is different is the US dollars, the denominator. There's more US dollars out there. And this is, it's almost a year and a half ago now, but I started covering this. In the early days of the channel, I was covering much more macro topics. And this is right here a view of your wealth will be diluted. So this is the amount of US dollars out there. And of course, most people, when they talk about money supply, they talk about the M2 money stock, right? And we know the M2 money stock right now is, 21-ish trillion dollars, and the Fed has been raising rate, and as a result of that, as you can see right here, it hasn't risen as much. But we always forget about the euro-dollar system. Everybody forgets about the euro-dollar system. The euro-dollar system, by most estimates, is much bigger than the M2 money stock system, and it is not subject to the Fed. So dollars are still created in the euro-dollar system, in the commercial banks abroad. And of course, these dollars that are created abroad make their way back into the US economy through the form of trade and purchases. So that is the main reason. The wealth is diluted, and what's horrible is that, first of all, the M2 money stock is an estimate, a best estimate by the Fed. We actually don't know how much money there are out there, or how many US dollars there are out there. We don't know how many US dollars there are out there. But Eurodollars is so opaque. We don't know how many dollars are held outside of the US financial system. We have no idea. It is the most opaque thing. And so you have, in the case of the dollar, you have everything divided by more and more currency created out of thin air. In the case of Bitcoin, you have everything divided by 21 million. And it's actually way less than that because people lose their Bitcoin. And when people lose their Bitcoin, you reduce the supply for everybody. So why Bitcoin? Because Bitcoin is the only asset where you have a guarantee they won't make more of it, but they will make more dollars. We know for sure they will make more dollars. They make more houses, about 1% more houses a year. They issue more stocks. Companies issue more stocks all the time. That's why a lot of investors are really upset whenever a company issues stocks, right? They always find more gold. If gold were $10,000 an ounce, everybody would be starting looking for gold, like the California gold rush back in the 1800s. They can make more of just about everything, even land. Think about, say, the impact of vertical farming and what that's going to have on land. But, even Dubai makes land. You can make more of just about everything. But the one mainstream asset, don't go tell me in the comment that there's like one dinosaur bone that is unique and can't be made. But like the more mainstream, like when you start talking about, hundreds of billions of dollars in assets, Bitcoin is about $1 trillion asset. When you talk about $1 trillion assets, Bitcoin is the only asset where you have a guarantee they can't make more of it. They just can't. So, how do you know? How do we know that they can't create more Bitcoins? Well, if you wanted to create more Bitcoin, you would need to update the Bitcoin code, the Bitcoin core, as they call it. And in order to do that, you would need to get all of the nodes to agree. These nodes are these little boxes. They're a few $100, these little boxes. And they're typically run by geeks and Bitcoin maxis, people who love Bitcoin. They just plug it in. It uses barely any electricity. You plug it in and you just run the ledger, run the Bitcoin ledger, and you check Bitcoin transactions. Anybody can verify Bitcoin transactions. There's about 80,000 of those around the world, and they all have to agree. And that's why it's very impossible to change the protocol. Bitcoin operates at the same level as the level of the internet. To turn off Bitcoin, not only do you need to turn off all of the modes, but you also need to turn off all of those who have the privilege of writing on the ledger every 10 minutes. And those people with the privilege to update the ledger on those nodes, who has the privilege to do that? Well, it is the famous or infamous Bitcoin miners. And so to talk about the Bitcoin miners now, we have to talk about how is Bitcoin protected from things like theft, denial of payment, like that happens sometimes in the banking system, inflation, when a politician decides to issue more dollar to finance, I don't know, whatever they want to finance, not important, or confiscation. How are you protected? Well, you are protected by Bitcoin miners. Bitcoin miners, if you want to have the right to update the ledger, so if you want to have the right to say, I want to change, I want to cancel a transaction, or I want to make this transaction, or I want to confiscate that money, if you want to have that right, you need to have 50% of the mining power in that block, in that 10-minute period. But to do that, that means you need to achieve half of these numbers right here, because the Bitcoin network is powered by, right now, and these are numbers I just found in a search right now on the internet, it's powered by about 240 terawatt hours of power used per year. That's roughly that. So essentially, to power the Bitcoin network, you have about 35 full nuclear power plants. I'm not talking about nuclear reactors. I'm talking about nuclear plants, not reactors. So, you have about 3 or 4 reactors per plant. You need about 35 nuclear power plants to run 365 days a week for a year. That's what you need to run the Bitcoin network. So if you wanted to falsify the Bitcoin network, you'd need what? You need 18 nuclear power plants running full steam to power, and this is my estimate, I may be off by a few billion, but my estimate is that you would need to have also $30 billion worth of US worth of semiconductors. You need a lot of miners, and of course, the time it would take you to accumulate all of these miners would make it impossible for you to pull it off. And that's why we say Bitcoin is protected by the laws of thermodynamics. It's not privilege that gives you the right to write on the ledger. It's not privilege that gives you the right to approve or disapprove transactions. It is the laws of thermodynamics. It is, have you spent the insane amount of power to earn that right? You earn that right to change the ledger after spending absolutely insane amounts of power. And of course, no single individual has this amount of power, which means that the ledger can't be changed. And even if a nation state somewhere could change it and could manage to influence a block enough that they get to double spend or that they get to write something on a block, then you have to worry about the 80,000 quote-unquote Bitcoin maxis who would never, ever, ever, ever approve that, and you would go back, rewind the ledger by 10 minutes, rewind the ledger by one block, and you wouldn't have that transaction go through. So the system, in my view, is as foolproof as I've ever seen. This is more foolproof than any social system. This is a rules-based system, not based on power dynamics between leaders and followers, right? So that's what I think is very compelling technically about Bitcoin. Now, I've been told whenever you talk about technicals about Bitcoin, it's kind of a turnoff for a lot of people. So let me move on. Practical now. We're talking about practical stuff. How is your Bitcoin stored? How does that work? Well, you could do it the way I do it, and the way most people still do it. You could do a layer 1 Bitcoin. You could just store it on the ledger. And so, how do you do layer 1 Bitcoin? Well, I mean, you can do it directly, and you go. You have these old websites from the 2000s, late 2000s, and you move your mouse, and it generates a code, and it generates a QR code, and then you print it, and it's called a paper wallet. You could do it the old way, but it's not very secure. The better way to do it is to use what we call a hardware wallet as opposed to a paper wallet. This is a hardware wallet. This is a little wallet not connected to the internet, right? But you connect into your computer, you set it up, and then it will give you a passphrase, either 12 or 24 words, and all you need to do is memorize that passphrase. And once you've memorized that passphrase, you pretty much just need to remember that. The wallet will generate a QR code, and you can buy Bitcoin somewhere, transfer it to the QR code, and that QR code is attached to your passphrase. Of course, every time you do a new transaction, there's a new QR code set up. But what you do is once you have your Bitcoin loaded on a key like this, right, on a hardware wallet, the hardware wallet itself is not that relevant. The only thing that's relevant is that you remember the passphrase, because if you remember the passphrase, you can regenerate the money anywhere from any wallet. The passphrase is simply a better way to write your private key. So it's entirely possible for you to say, buy $100,000 worth of Bitcoin, put it on a Trezor wallet, memorize the code, and then forget about the wallet. And then maybe 30 years later, maybe if you want to get the Bitcoin back 30 years later, all you need to remember is 12 or 24 words, the passphrase. That's why we say in Bitcoin, and I've always said Bitcoin is money as speech, money as free speech. You store your money in the form of speech in your mind, and you can actually store billions of dollars in a 12-word sequence. And that's right there revolutionary, because it's just words in your mind. That's it. How else can you store Bitcoin? Well, you can use the Lightning Network, not to get technical. You can also store it on another smart contracts platform like Ether that was wrapped BTC. You can use layer 3. A lot of Gen Z, maybe less techie-oriented Gen Z, love using layer 3 type storage Bitcoin, things like Cash App, Robinhood, Coinbase. That's what I call, by the way, these are not accepted definition of these layers. This is just how I call it. Then you could use layer 4. Layer 4 is the ETF. It's yay. We have the ETF. Isn't that wonderful? So really, how layer 4 works is that you own it within a traditional finance website, right? A traditional finance institution who then custodies the Bitcoin through Coinbase, and then Coinbase may own the Bitcoin outright in a hardware wallet. Or Coinbase may also be involved in other forms of owning Bitcoin, but you trust Coinbase as the custodian, and then Coinbase serves the ETF, and then the ETF serves you. So it gets complicated, and you can do even more complicated. You can be layer 5, which is what we call 5 times removed from Bitcoin. That would be owning, say, a Bitcoin mining stock that has a lot of Bitcoin on the balance sheet, or even MicroStrategy. So this time you're owning a stock on Legacy Rail, and that stock itself is owning Bitcoin on crypto rails, and that Bitcoin by the custodian may either be held directly or not. But you still get exposure to Bitcoin, and of course, you could go even further and say, look at ETFs that own ETFs. Like for example, the ARKW ETF from Cathie Wood owns another ETF that owns Bitcoin. But there's many ways to get exposure to Bitcoin in the investment world, right? Not just the passphrase. I understand that the passphrase can be scary to some people. What if I have a stroke? What if I don't remember? I understand that, but there's multiple ways to own it. Although keep in mind that no ways will be as protective as, say, the passphrase. The problem is that you gotta trust yourself if you use the passphrase. Let's talk about adoption a second. Again, these are the numbers are as of today. Gleaned from online, BTC adoption. You have about 219 million individual users around the globe that own Bitcoin. In the USA, that's 67 million. So it went up a good 20+% compared to 2 years ago. I remember it was 50 or 48 million for the longest time. So that went up. Of course, Bitcoin is the most widely held cryptocurrency. At 219 million users, to give you an idea of perspective, we are nearing the number of people with Netflix subscriptions. So Bitcoin has become an international brand. It is meaningful. If it were a company, it would be a meaningful company to have 219 million customers or users. That's a meaningful stuff, right? That's not a small company. And of course, the bet is, as we go through halving cycles, will we get to 1 billion someday? I see no reason why we wouldn't. I mean, Bitcoin is already a brand. There's no reason why we couldn't get to 1 billion when we're at that level. So the law of adoption, word of mouth, S-curve adoption keeps going strong for Bitcoin, and it goes through cycles every 4 years because of the halving. Now, why is Bitcoin valuable? Well, to understand why Bitcoin is valuable, you have to go back into the history of money and understand how people have chosen to store their wealth. Typically, over history, people always choose to store their wealth in whatever is the hardest to acquire, the hardest to make, and for the longest time, that was gold. Which is why most people stored their wealth in gold, because it was the hardest amount of money. It was the hardest money to find, hardest money to make, hardest to falsify. So that durable, right? Gold had a bunch of benefits. Well, today, why is Bitcoin valuable? It is durable. Obviously, it's stored without counterparty risk. You store it in your mind. It just stays with you. Even with the wealth of nations, you can't alter the ledger. So that's absolutely amazing. But it's also the hardest money to create because it's a money that follows the laws of thermodynamics. So you don't create Bitcoin by knowing someone or by negotiating a little better your salary and getting better pay or getting a better loan condition with a banker or anything like that. No, the only way you can get Bitcoin is by spending the energy. You got to spend energy to make the Bitcoin. That's the only way. Right now, per my estimate, it takes about 350,000 kilowatt hours to make a Bitcoin. If you pay 10 cents a kilowatt hour, that's $35,000 worth of power to make a Bitcoin, and that's why most Bitcoin miners try to pay well under 10 cents a kilowatt hour for Bitcoin. For a Bitcoin miner, you want to pay 5 cents a kilowatt hour. That would give you a $17,000 worth of power Bitcoin, and then that would be enough for you to also pay for the equipment, pay for your employees, the facilities, etc., etc., etc. It takes a lot of power to mine a Bitcoin. That's what makes it valuable. That's what makes it very different from all of the other cryptos that can just be printed out of thin air. This one can't. This one you can't get Bitcoin without spending the energy, spending the power. That's why a lot of people make the link between Bitcoin and energy, because it is entirely linked with energy. You gotta spend, like I said, 350,000 kilowatt hours to create just one. And by the way, the cost of Bitcoin is about to go through the roof. The cost to create it, the hardness of it is about to go through the roof thanks to the halving. Thanks to the halving, instantly the number of kilowatt hours you're going to need in order to mine a Bitcoin, it's going to double. It's going to double because the issuance of Bitcoin is going to be cut in half. And miners get that issuance of new Bitcoin. So that's going to double. So that means it's going to cost you 70 grand worth of electricity. If all else stays equal, it's going to cost you 70 grand of electricity to create one Bitcoin. That's why I happen to believe that Bitcoin will roughly double by 2025, because it's gonna become twice as hard. Why is Bitcoin valuable again? Bitcoin trades at the edge. That's important. So miners, how do you get new Bitcoins into the hands of these ETFs and the hands of these 200 plus million users of Bitcoin? Well, you got to have miners who mine it and then sell it. And they sell it typically to fund their operations. So buyers, new ETF infos, they always buy from the edge. You always buy brand new Bitcoin, freshly issued Bitcoin. A little bit like when you go buy gold, it's typically freshly mined gold. Now, here's the thing. Most most BTC holders and most BTC hold in long-term storage. Long-term storage is what I showed you. It's a passphrase, right? And if you've destroyed your wallet, or if you haven't used it in years and you don't want to set up a software program, it's not that easy to decide to go sell Bitcoin. Most people want to hold it for a long time. And so it trades at the edge, which means it's the miners who have to sell it. They're going to sell less and less and less of it. And the people, the maxis, as they're often called, they are never going to sell their Bitcoin because they believe in the mission. And so the good way to think about it is that if people keep buying Bitcoin, Bitcoin's going to go up because unlike, say, in the case of GameStop, if you follow that, where you had Citadel who prevented people from buying Bitcoin, you cannot prevent anybody from buying Bitcoin because it is a network that is permissionless, that is secured by miners, and you can't have one person who says, I don't allow people to mine Bitcoin because it's getting too expensive or anything like that. Like I said, mid-April, in about mid-April, the new supply of BTC will be cut in half. Theoretical 2x from that alone, no financial advice, of course, but that's why I own Bitcoin. That's why I've bought more Bitcoin recently, and I keep buying more. It's already starting to get expensive at 37,000. Will you ever sell your Bitcoin? That is the big question, right? Will you ever sell your Bitcoin? That's a classic question if you think in terms of fiat, right? But most people who start to think one Bitcoin equals one Bitcoin will tell you they won't sell because they have a Bitcoin. They don't have dollars anymore. They don't want dollars anymore. They just want a Bitcoin. Well, let me tell you how I think about the question, will I ever sell my Bitcoin? So I've been in the space since 2015. So I guess I was an early adopter. And when you talk to early adopters of Bitcoin, you'll always hear my story. My story is that I sold it all at 250 a Bitcoin in 2015. And I thought I had dodged a bullet. I thought I was real smart. Everybody was telling me Bitcoin was a bad idea. And so I try to not think about it. But currently at the current price, it'd be about a $20 million mistake to have sold that Bitcoin. Think about it, a $20 million mistake. And I bought back way later at a much higher price. So do you think I'm going to sell the Bitcoin again? Right? Do you think when Bitcoin was at 18 or 19,000 a year and a half back, do you think I was selling? No. When you make the mistake of selling at 250, you don't sell at 19, you don't sell at 190, and in my case, I don't sell at 1.9 million. In my case, and I will tell you one thing: most Bitcoiners who have gone through that mistake, I'm actually grateful I went through that mistake, because once you go through that mistake, you don't do it again. Many early Bitcoiners, they make the sour mistake of selling whenever they see the first cycle thing, whenever they see the first drawdown 80%. You sell once, you never say it twice. And I'm not ever selling my Bitcoin. And there's a lot of people like me who are never ever going to sell their Bitcoin. And then you may say, well, why do you want to own Bitcoin if you don't ever sell it? Well, we can't know the tools of the future and how Bitcoin will be used in the future. But if the flip from US dollar to Bitcoins, or from any currency you can think of, to Bitcoin, if that flips happens, then you don't need to sell, obviously. But as long as you live in a world where fiat and Bitcoin coexist, which is what I anticipate for the next 30 years, maybe more than 30 years, maybe forever, as long as the both of them coexist, I would argue that myself and a good portion of all Bitcoiners simply plan to borrow against their Bitcoin. And there's early solutions on this where you can put your Bitcoin in a multi-sig wallet and co-custody it with, say, a lender. And you have very, very interesting innovations in the field of, for example, Bitcoin mortgages. Like, let's imagine someone has $1 million in Bitcoin. Maybe if you co-custody your Bitcoin and you own a part of the key, they own another part of the key, maybe you can find someone to lend you fiat against your Bitcoin. And that comes to mind as a main application. Another application which is already live right now on Robinhood, which is why I find that very interesting, just in case it's needed. Robinhood has a 30% margin requirement, maintenance requirement on GBTC. And you know that most Bitcoin ETF, you have a 100% requirement, which means you can't do margin on Bitcoin, on most Bitcoin ETFs as of today. But as of today, you can do margin on the most expensive Bitcoin ETF, which is GBTC at 1.5% expense fee. And you can borrow against it at Robinhood, and I'm sure there's over a few brokers that allow you to borrow against GBTC. That's perhaps the best way that I found to do it, assuming you want to do this. And again, if you're a true Bitcoiner, I think it's probably too early to think about borrowing against it. If you're a true Bitcoiner, you're probably waiting another good 10 years before you're going to start thinking about borrowing against it. I am not borrowing against it, but I'm just saying it's possible to do on Robinhood, which is fascinating. So anyways, this was no financial advice, no investment advice of any sort, right? No commodity advice, no advice, just entertainment, hoping you were entertained. I appreciate your likes. I appreciate your subscribes. Thank you so much for watching, and have a wonderful, wonderful day.